Great. Good afternoon, at least from here, from Germany. Very warm welcome to the presentation of Endgame, the state of the Russian economy, which is a joint Kiel report that the Kiel Institute did jointly with the Stockholm School of Economics, the Stockholm Institute of Transition Economics, and fantastic partners from around the world. Matt Klein from this fantastic the Overshoot blog, Elena Rybakova, who's going to speak as well today, and a few others that you can see here on the slide. My name is Moritz Schulrich. I'm the president of the Kiel Institute, and I want to extend a very warm welcome to all of you. We will present the key insights from our joint work today. After my quick introduction, I'm going to hand over to Matt Klein, who's then going to pass the baton on to Elena for quick presentations, and then we're going to open it up for Q&A, where where Torbjörn Becker from Stockholm, who is one of the co-editors of this volume, will take over the moderation and guide you through the afternoon with incredible competence and knowledge. I want to not spend much time to take away from the excellent work that the authors of this report have done. I just want to give you a little bit of a background to what has happened and what we've done, and also why we've chosen the title of Endgame, because we think that the contours of an economic endgame are coming into sight for the Russian economy. The Russian economy is in an unsustainable macro position where real capacity constraints are binding, where more fiscal spending does no longer automatically increase output but goes into higher prices, or an economy, in other words, where true hard trade-offs are looming and are around the corner. So fiscal buffers are used up. The growth has come to a standstill in the first quarter already. Inflation is still high and likely under-recorded. The budget deficit is spiraling. As a matter of fact, the first quarter budget deficit already reached the level that was targeted for the entire year. And what we think and why we chose this title of Endgame is that the hard choices that are going to come will alter the political economy of policymaking in Russia, and it will open up a very meaningful and important window for policy actions on the side of Europe and other countries. We do think that, and this is part of the proposals that we also make at the beginning of the report, is that the time has come to revitalize, to revisit some of the ideas that have been discussed in the past years of the Russian aggression against Ukraine and the war against Ukraine, namely to really think not just about tightening the sanctions regimes, where recently we've seen some successes, especially when we talk about the shadow fleet, but to revisit some other instruments that would make it harder for the Russian economy at this juncture to sustain its current path. More precisely, we have been side of the Kiel Institute have introduced or reintroduced an older idea to impose tariffs on the remaining trade between Europe and Russia. Europe and Russia still trade about 60 billion a year in non-sanctioned trade across a wide range of items and sectors. And we've run our sort of general equilibrium, big trade, quantitative trade model to get a sense about how much revenue can be raised, how much taxing the remaining trade with Russia would make the economic situation in Russia even more difficult, and to what extent we could also raise revenue on the European side from taxing that remaining trade, with the argument that companies had time to adjust and the situation, the difficult trade-offs, the difficult choices that lie ahead in a Russian economy whose fiscal buffers have been depleted, whose lending often somewhat directed and under the table to the military and military sector has risen dramatically in recent months. That this situation, coming back to this idea of taxing remaining trade with Russia, both to raise revenues and make and accentuate these constraints, is an idea worth considering. I also want to say one thing about the Russian-Chinese connections and the growing economic integration, and Elena will go into much more detail. It is true that the Russian-Chinese economic relationships have become ever more imbalanced, and China has really turned into an important supplier in a more and more unequal relationship. Also on that side, I think the trade-offs for the Russian economy are, and for the Russian leadership, are growing and not becoming smaller, because the economic dependency, the technological dependency on China has grown enormously, raising concerns, as we obviously hear, not just in the West, but also in Russia. With this sort of broad idea where we came from, I want to close by saying I'm very happy that leading European and American thinkers and institutions found together for this report. I think it's very timely. We've seen the news from the Gulf over the past hours. The temporary relief that higher oil prices gave certainly to the external balances of the Russian Federation might come to an end now. And so I think all the themes and the topics that we address in this report, the depletion of buffers, the unsustainable macro path, the hard capacity constraints that are biting, and the growing dependency on China will come into focus even more in the coming weeks and months. With that, Matt, if I can hand over to you, and I know you have a presentation to share. Welcome again, and I hope you are looking forward to a great discussion.
Thank you very much, Morris. Thanks for including me in this. So I just have a few basic points here. One, in the past year in particular, the Russian government dramatically increased its total spending relative to what it had been doing before. You can judge for yourself whether that was meaningful in terms of the results they got on the battlefield, but they did a large increase relative to what they did before, and yet it's not clear how much more they could do. The second point is that the government budget by itself, despite the attention that gets in terms of its borrowing and its spending, has actually not been the biggest source of financing for the war effort. It's actually been the domestic banking system lending to companies and industries affiliated in military-related fields, that's been bigger. Then just also reiterating what Moritz was saying is that the big constraint on the Russian ability to either produce or to fight or what have you has been the lack of ability to get imports. It's not even the ability to generate export revenues, but the ability to translate those in imports, which have continued to be constrained. And just very briefly noting that even when oil prices and energy revenues were increasing, they didn't increase as much as one might think, and that hasn't led to an increase in imports. So there are a lot of charts in here. I'm not going to go through all of them in great detail. I would encourage everyone to read the report for more details. But as you can see here, this is showing there was a big increase. Some of this, these are shown in dollars just to get a sense of normalizing of what prices and inflation. And to get a sense, you can see there's a big increase in spending in 2025 relative to the earlier years of the war. Didn't necessarily. Most of this, by the way, was not financed. Oil and gas revenues have been relatively unimportant compared to other taxes on the rest of the economy. The budget deficit did increase somewhat, not a huge amount, but it did increase, and yet nevertheless, again, not a huge change in sort of overall outcomes. What you can see here, I think, is really striking. This is showing the change in non-financial corporate debt by type, measured in dollars. Again, trying to give you a sense of adjusting for inflation and things of that nature. You can see when the war starts, there's immediate pullback in financing from abroad. So foreign currency denominated bank loans from abroad, in particular, contract. That's substituted by increasing borrowing in rubles from domestic banks. Basically since 2024, there's been a very large increase in lending by the domestic banking system. That's incredibly substantial. That increase in debt, for perspective, is actually larger. Basically, since the war starts, that increase in debt is larger than the cumulative budget deficit of the Russian government by about 25%. So this is a very substantial. If thinking about what is financing the war effort, this is a very substantial part of it. And looking only at the official accounts, you're going to miss that. And here's a way of visualizing this. Um, so the Russian government, they categorize industries by many different classes of what the categories are. These sectors, 16, they were identified by the analyst Craig Kennedy as being military related. You can see that before the war started, the total bank lending in rubles to these sectors basically grew in line, all lending to the rest of the economy. The war starts, that changes quite dramatically. The growth rate in ruble terms of lending to the non-military related sectors basically continued exactly the same growth rate since the war started as before, whereas for the military related sectors, it's something like triple the growth rate. And then this is just a breakdown of what those sectors are and what the contributions have been. Again, the previous chart was showing in rubles. This is showing in dollars to get a magnitude of the increase. Again, there's a big increase in lending basically since the end of 2024 that has provided a lot of extra financing to the war effort indirectly in a way that doesn't show up on the Russian government's balance sheet. But it also does show up in the Russian government's balance sheet in a particular way. This is the Russian government, central bank publishes what's called the financial accounts, and there are different ways of measuring how all the different sectors of the economy accumulate claims and liabilities against each other. This is showing the Russian government normally it's these things, accounts receivable, accounts payable. Normally in businesses, you think, okay, it's like money you owe a supplier or money you're expected to get from a customer. What it means in the context of a government can be a little unclear. It could be tax revenues that you've deferred. It could be other things, not entirely clear. Regardless, in the case of the Russian government, until the pandemic, these things lined up perfectly. They weren't very large. The pandemic, you get a little bit of a gap that could have been, pandemic relief loans or things of that, deferring taxes, that sort of thing. Regardless, since the war starts, there's been a huge disconnect here where the accounts receivable assets held by the Russian government have exploded in a way that accounts payable liabilities have not. So what's the corollary here? The corollary is that the Russian non-financial corporate sector has been suddenly borrowing much more in accounts receivable, net accounts receivable, than they were before the war. And in fact, the Russian non-financial corporate sector, which had been roughly spending about as much as it earned in the aggregate before the war, is now a massive borrower. So even if the Russian government budget deficit is not particularly large, if you think about the corporate sector, much of which is now borrowing to finance war production, at the behest of the state is now borrowing a lot. So if you look at this consolidated picture, there actually is much more of a debt increase than there was before. And, to the point that Morris is making, that the question is, how are you going to be able to service all that debt if you're not growing? And this is another element of how this might be mapping onto it. I'm not 100% sure this is how it makes sense, what these accounts receivable assets are. But this is the Russia's National Welfare Fund. It's supposed to be if you have oil and gas tax receipts above a certain target, then you put the surplus in this fund. You can see over time how the assets have changed. At this point, most of the assets are held in ruble-denominated assets not held by the central bank. Uh, Not entirely. I mean, I believe those are claims on various Russian businesses, which would be consistent with sort of accounts receivable story part of it anyway. There's a little bit of Chinese yuan. There's some gold. The gold assets look more stable in dollar terms than they are in weight because the gold price has gone up a lot. But they've actually sold by weight about almost 80% of the gold that they originally had allocated to this fund, swapping it out for ruble-denominated claims on Russian businesses. Now, here's something interesting here, which is this is showing through uh, well, if you go through May, it wouldn't look different, but that came out a couple days ago. But the oil and gas tax revenues monthly from the Russian government, they have, despite the fact that Brent crossed over $100 a barrel in the past few months, have only been about $10 billion a month in April and in May, which is when you'd expect the higher prices to be showing up in revenues. That is far lower than what we saw last time Brent was trading persistently in this range, which suggests that there are limits on the ability to actually translate those higher prices into production and sales. which could possibly be a function of sanctions, could be a function of Ukrainian attacks on refineries and so forth. But it's an interesting point. This is not it's not been a major windfall thus far. And in fact, you can see this also in the export revenue data, where so far through April, revenues are up for total exports of all goods, are only about 15% higher than they were in the beginning of 2025, which was not a particularly banner year for export. And imports spending has not gone up at all, which is consistent with here, which is that we've seen this was true when export earnings surged in the beginning of the war, and it seems persistently true, which is that the ability to translate higher export earnings into higher import spending has been significantly constrained, presumably through sanctions, and that a lot of those revenues have either been going towards financing capital flight or just accumulating asset claims that they can't otherwise use when they'd rather be buying more goods and services. That seems consistent. That was true then. It seems like it's true now. And again, you can see the breakdown that during that period in 2022 when export revenues were surging because of the impact of sanctions, actually, rather than translating into more imports of goods that would be useful for them for the war effort, it mostly was financing people emigrating, moving out of the country, or companies that were essentially writing down that they were getting unpaid bills that they were expecting to be owed. So. That's the basic presentation here. I think hopefully that was helpful for understanding the constraints on the Russian economy, that they're not able to, when they have extra revenues from exports, they're not able to import more, that there's been a lot of borrowing off the federal government's balance sheet to support the war effort, and that this is quite possibly not sustainable given the pace at which this has ramped up in the past year and a half. Thank you.
Great, Matt. Thank you so much. Let me hand over to Elena and use the opportunity to not only welcome Elena and our friends from the Peterson Institute and the Kiev School of Economics, but also to say again that we're very happy to have this event today in cooperation with CEPR. We've been, as always, a fantastic partner. Elena, are you there and ready to take over?
Yes, I am. Just give me a second from the beginning. There we go. Can you see it clearly, right? So we have it's fantastic to have everybody here. I'm glad I'm following the sort of tough acts to follow, but I'm sure we'll have a great discussion. We have, the China-Russia asymmetric partnership. I would even go further, the supplicant and the sovereign. That's how I would call the relationship. And I think it was clearly demonstrated in the recent meeting of the two presidents, President Putin and President Xi, just a few weeks ago. So what has happened in this relationship? I would call it is a deeply and structurally asymmetric relationship. So cooperation is real, and we shouldn't think that it will break down any moment now. But the relationship is highly asymmetric. So if you look at the share of trade from Russia to China and vice versa, it is overwhelmingly much more important for Russia than it is for China. So as you can see, China has almost fully replaced the coalition countries that are supporting Ukraine and against Russia's war of aggression on Ukraine. So there's been a significant flip. So you see the share is much more, sorry, I'm just jumped to a different slide. There we go. It's much more significant for Russia. But at the same time, if you were to look at the flip side of this chart, Russia is barely registers in China's global trade, in China's global investment or exports and imports. Why does it benefit China to continue the relationship with Russia? Well, that is very simple to explain. China gets discounted oil. And we have seen that Chinese strategy of getting discounted oil to this mid-size sort of special refineries, it's very pragmatic shopping around. When it's Venezuela or Iran or Russia that fall under sanctions, China benefits by getting discounted sanctioned oil at the same time trying to ring fence the way it gets. Yes, some of these refineries are not so small, and maybe they also get when they do get sanctions, there are some repercussions, but at the same time, there is an attempt to ring fence them from other parts of the industry, other parts of the financial industry, and that allows them to trade successfully in this cheaper oil. It is also very important to point out that the biggest sort of bargaining power that China and also India received was from the embargo by the European Union in 2023, much less so from the G7 oil price cap. We can talk about it during the Q&A, but there's been wonderful papers, including by Dallas Fed, Lutz Killian and others, sort of trying to break that apart because those two measures came at the same time. So Europeans actually do hold a lot of power as far as the sanctions are concerned. Especially nowadays when the US, is giving waivers, one could feel that what can we do? What can we do without, the ability of having secondary sanctions? Or how can we stop the shadow fleet when Russia is now flagging its shadow fleet under its own name, Russia's name, which might create problems to stop it? Well, Europe still has a lot of power because it controls the insurance market. So European authorities can not only go after directly the shadow fleet, but also discuss the environmental impact of these tankers going after, under insurance of the company that was registered yesterday and barely has any assets, whether that is actually possible to go through the European waters. So this is the key issue, is that China has a lot of access to these cheaper resources, but at the same time, it is opportunistic. It doesn't have to go beyond that. China, in theory, has sort of an internal rule where they try not to rely more than 15 to 19% of or 20% of its total energy imports on one supplier. And Russia is close to 19% at the moment, so China can afford to be cautious. And that, I think, also is demonstrated by the fact that, we've had recently, again, discussions about power in Siberia. It came up about 6 months ago. It came up during the recent visit, the power of Siberia to pipeline. And China is full of promise, but very reserved in terms of committing actual money. And if you look at the Chinese investment in Russian economy or Russian companies' registration, the Chinese company registration in Russia, these are mostly in wholesale and retail trade. These are very small companies with very limited, investment. There are thousands of them now, but most of them are focused on just the sort of in the trade industry. And if you look at the service of the Chinese companies asking them, why aren't you investing more in Russia? Oftentimes, actually, unpredictable domestic regulation comes up, and unclear property rights is some of those explanations why Chinese companies are so cautious in terms of investing more into Russia. Of course, we have seen some investments historically to the circle around Putin, especially in the resource base, but again, it has so far been very pragmatic, very targeted, and actually very small in amounts. So where has China been the most influential in terms of supporting Russia? I would say that without Chinese support, Russia's war in Ukraine would have likely ended by now. And it is a controversial statement, I know. And we have spent a lot of time discussing whether the red lines have been crossed and where are they exactly and whatnot. But I would say there are no actual red lines. It's a continuum, right? If you're supplying a lot of the components and sometimes even investing together with Russia in drone production or potentially other military industrial complex, again, small amounts, how far are you going to support Russia? Whether China or not is supplying, Russia with ballistic missiles, probably not. But China, as you can see on this slide, has been a critical, important partner to Russia to continue the war in Ukraine. And the way that China operates is that they provide access to their own components, which are sometimes not as good as those of European or American partners, but significantly, they provide opportunities for transshipment via China, or maybe by joint venture produced or licensed products that are produced in China and then go to Russia. These are very important dual-use good components. Oftentimes, these are chips, but not only. And this way, Russia gets access not only to Chinese components or CNC machinery, but also to the European or particularly American made or licensed components, which are so important for Russia's military industrial complex. Russia has been trying to produce domestic alternatives, but so far have been highly unsuccessful. And therefore, China's role here is also very important. If you were to give me a scenario where, say, China doesn't provide any dual-use goods, I would still think, given the trade support of consumer goods that China has provided to Russia, it is still critically important for Russia's war machinery. How would that be? Well, if Russia's companies that maybe produced cars, especially after the withdrawal of the Western companies, would have had to supply domestic market with the sort of normal cars, not the military industrial complex cars or sort of more normal trucks and cars, well, they would have to choose how much resources they can allocate to production of the military vehicles versus regular vehicles, right? But because China's influx of cars into the domestic market freed up this domestic Russia's resources, they could then refocus on the military industrial complex. So China's role here is indeed supporting the war machinery with direct components, but also providing sometimes economic buffers to Russia via buying Russia's exports, hydrocarbon exports, and also providing critical consumer goods to Russia, giving this extra buffers to the Russian economy. What does that mean for the medium term? And I'll stop sharing. I think I did stop sharing, did I? Yes or no? Hold on. Stop sharing. So what does that mean for the medium term? I think for Russia, it is locking itself into the partnership where Russia doesn't have any alternatives. While for China, it is benefiting short term, at least, from the discount commodity prices. Of course, with the recent changes in the waivers and what's happening in Iran, and I'm sure we'll discuss it more, China's maybe buffers has gotten a little bit smaller because Russia also got the opportunities to resell again to India and others at a smaller discount. But I think those discounts will soon come back if the peace deal in Iran will prove to be durable, right? So China's short term is gaining extra opportunities for cheaper resources, but beyond it's getting its opportunity to dump some of their car manufacturing, for example, overproduction or over manufacturing overhang to Russia when other parties are not interested in picking it up. And then it's also getting an ideological sort of support for their multipolar world conversation. That's why for China at the moment, beyond this immediate sort of results, it's understanding that in the future, Russia will get even more locked into this asymmetric relationship, and China will continue to benefit from it. Therefore, there is no reason for them to go out of their way to support Russia in any other meaningful way, for example, like commitment of resources. So I'll stop here. Thank you very much.
Thank you, Elena. Moritz, unless you want to add something before we jump to the Q&A, I think we are actually now at the point where we can ask questions and have an open discussion about how we think about what's going on in the Russian economy. I think both Konstantin and Ika, that are two of the co-authors of this report, are with us here today. So I would just like to offer you the opportunity to add a few points of your own if you think there are things you want to add at this point. Otherwise, come back when you want during this discussion. So the floor is open. While I'm waiting for you to either put something in the chat or raise your hand. Yes, I see Ika. Or would you like to add a few things, Ika?
Just briefly, basically to agree on basically everything that has been said so far. I think we are now seeing the Russian economy has basically run out of free resources, or that happened already perhaps 1 year ago. So the big increase in public spending, it has mostly shown up in higher prices. And as was discussed, especially starting since last autumn, we were able to push down the price of Russian crude oil, the export price Russia gets for its crude oil in basically all markets. I mean, the discount that the Chinese were getting from November to February was around 14-15%. In March, it basically fell to zero, but now it's widening again. I think this clearly tells us that there are things that we can do, and there are things we can do, say, for the shadow tanker fleet, where we can actually make a difference. The Ukrainian drone attacks did help slightly, but I think looking at the tanker traffic in the Gulf of Finland, the effect was basically over after 3 weeks. So the biggest effect in terms of value came from our sanctions and our actions against the shadow fleet. I think going forward, clearly Russia is struggling to finance the war effort. So the tax revenue is really stagnant, and especially the first 5 months of this year, the federal government expenditures have increased a lot. But this is front loading, and they want to get in as much equipment to before the summer. I don't know, but clearly this is not sustainable for a long time. And I think if we can again get the Russian crude oil price and hence the tax revenues from it further down, this would go a long way towards helping Ukraine in its fight.
Thank you. I also see Konstantin. Would you like to add a few words from your side?
Just very few. Elena summed up my part very well. So I would just like to add that indeed China is playing a huge role in supplying Russia with forbidden products, both on consumer side and on military side, and both in rerouting, let's say, European or American-made products and producing their own Chinese products. And quantitatively, China is by no means China is the only country that does this, that helps Russia in avoiding sanctions. But quantitatively, it's more important. China is more important than all other countries combined, and that's pretty much it.
Thank you. I see two hands on the screen. I will let you in 1 second. I just want our speakers to maybe also at some stage, but you can wait with that a little bit. I just have this idea now that when we see what's going on in the war between the US and Iran, if the oil market gets back to where it was before America started this, what type of discussions do you think we should have with both India and China in terms of how they purchase Russian oil? I was personally a bit surprised that Trump went to India and said that you should not be buying Russian oil at all, rather than just telling India you should buy Russian oil at a big discount, even a bigger discount, because that would have meant, getting India on the side of the sanctions coalition, helping them financially, and not sort of disrupting the oil market, which was the whole idea of having a price cap rather than to ban all of the Russian oil sales. And the other side of this story is, given what also Elena was talking about in terms of China and the relationship with the rest of the world, why are we not having more serious discussions with China? Is there no prospect for us to talk to China and use the economic power of the sanctions coalition when we have discussions with China in terms of how they support Russia with their goods? Having some discussion reminding China that, the economies of the sanction coalition is 25 times the size of the Russian economy. It seems like we are quite, hesitant to have any serious discussions whatsoever with China in terms of how they are supporting the Russian war machine. So, you don't have to answer this now immediately, but I think these are some of the big questions on the macro level to understand how Russia is going to be doing in the future. But I will let in. We'll take two questions after each other. I think I see Rolf and then I see Mark. So Rolf, please.
Thank you, Torbjörn. I would be interested to know about the inside of the Russian economy. In a successfully sanctioned economy, I would expect on Endgame to approach the disintegration of markets, say black market rates, split of markets. How close are we to this situation of black market rates in Russia?
Thank you. We'll keep that question and we'll let Mark make his comment or ask his question, and then we get back to the authors.
My question is about the premium that the Chinese government places on the survival of the Putin regime. In their relations with North Korea, I think that China has shown that they place a very high value on avoiding any kind of chaotic regime change in North Korea, which is on their border. And their border with Russia is much larger. And so it seems to me that, in fact, China, without ever having wanted the war in Ukraine, has shown a very great readiness to support Russia to the point of at least ensuring that there will be no chaotic end to the war. And I wonder how we should see Chinese interests in that light, and the scope, what scope is there to negotiate with China the kind of end of the war that we might want to see.
Thank you. Two interesting questions. One about black market evolving in Russia, and then the relationship between China and Russia and potentially the rest of us. Who would like to start with some answers or comments to these things?
Maybe I'll start quickly on the Russian black market. I like the black market question. So I think on the sanctions and the Russia being severely, sort of heavily sanctioned economy, I think we have to also taper our enthusiasm, because a lot of sanctions were taken very late and the enforcement is very poor. Right. So we, on the oil exports, we took those measures only in end of 22, early 23. And the G7 price cap was complied maybe for up to a year. And after that, the majority of the ships went without compliance with the oil price cap. So that is very important. And also, so we have shown in the paper, and also colleagues specifically on the topic, China has managed to supply Russia with a lot of critical components, especially US made. Some of you might have seen congressional testimonies by US companies explaining how they don't do due diligence of their distributors. And they could not commit to do due diligence of their distributors even within a year. And these are the largest companies that are producing chips for the AI, technologies that we're also excited about. So I think there are issues of us sort of not being sort of committed enough on the sanctions front. On the Russian economy itself, I will pass it on, I think, to Matt to talk more about it, because he's done a fantastic presentation on this. But, we've seen a contraction in GDP this year. We're seeing the discussion about expansion of credit. We're seeing the discussion about banks having difficulty to buy Russian domestic bonds, because they're the only they're the buyer of last resort. You're seeing financial repression. And we're also seeing that Russia has to most likely begin to abandon their budget rule in order to be able to meet the expenditure needs. So I think Russia is trying very carefully, Russian authorities very carefully, to sort of open up all the valves at the same time, while not relying on one excessively. And the fact that before Iran war with the US and Israel, Russia was already talking about revising the budget in January this year. That tells you something. Every country revises the budget. That's okay. You usually do it mid-year. But it's very infrequent that you would start discussing it at the first months of the year that you provided the budget for. Right? And the budget is made using oil price of 59 for euros. And if we come closer to that price, and already, as Matt pointed out, we have exceeded the planned deficit for this year, there is pressure. And then just final one, Russia has substituted reliance on the international capital markets and currencies with renminbi. Renminbi, as you know, very unpredictable and highly managed currency with very intransparent statistics. So you do have sometimes on the domestic market spikes in the cost of renminbi, that could destabilize the economy further. You see a lot of borrowing also that is intermediated via renminbi, and that also opens up a vulnerability.
Thank you. I also think that the black market issue is likely to become more visible over the years, or over the coming months. I mean, because when you have regulations in terms of how much people or companies can actually withdraw and how much currency they can get, at some stage you do encourage a different market to appear. And I think also if we start to hear more questions about the health of the financial system in Russia, I think people would like to figure out ways of getting out of bank accounts and out of ruble at some stage. And in particular now when the ruble is relatively strong because of all these different constraints, I think this may actually open up for some other type of trade in the exchange markets. And this is something we have seen in a lot of countries that have been under sanctions. Iran back in the days had, I don't know how many exchange rates when they had sanctions against them at the end of the 90s. So, I think this is something that could certainly evolve also in Russia.
Yeah, I would just say I don't know if this counts as a black market price per se, but I think the fact that interest rates, the official headline interest rates in Russia are very, very high relative to the official measures of inflation and growth and things of that nature. At the same time, you're seeing credit still rising very rapidly for certain favorite sectors. So in this sense, I think the black market price is sort of the inverse, where you're having for some sort of favored categories much lower prices of credit than for the economy as a whole, but it's being borne by the civilian economy and very high interest rates.
Yeah, I mean, subsidies is something that sooner or later someone will have to pay, and right now it's basically just being rolled over in the banking system is, I think, the key here. I see Yuri, and then I see Ika on screen. Yuri, please.
Thank you. It's a wonderful report. Thank you for writing it. I have three questions. One is, it's a great title for the report, the Endgame. And one question for you is, what would be the canary in the mine to say that the end is really near? Where will we see the first cracks? Something that is the regime is about to collapse. The second question, can you say a little more about the role of monetary policy, the Russian central bank in all of this? Do you see signs of fiscal dominance? How does it manifest, if any, in any way? And finally, I was wondering if you can speculate about what happens after, this war is over. So suppose that we have ceasefire tomorrow, what would be the dynamic in Russia? Thank you.
Thank you. We'll do Ika, and then we'll get back to discussing your questions, Yuri. Ika, please.
Okay, thanks, Torbjörn. I'm trying to sort of answer perhaps at least partially the question about China. I mean, I have been in many, many meetings with Chinese officials where different European officials have always told the Chinese our concerns. And then the Chinese always say the same thing, that they are impartial and they are not, they're not selling weapons, and then that's it. And I think one big problem for at least for Europeans, is that we currently have so many problems with the Chinese. I mean, just with the Chinese and with their export-oriented policy, where the exports are, industrial production and exports are subsidized heavily. So they are basically taking away our market shares in the EU, but also in third markets. And that's where a lot of the policymakers' attention currently is. And I do think as long as we don't have appetite for secondary sanctions, then there's not too much we can do directly to Chinese companies. When OFAC was doing even threat of secondary sanctions for Chinese banks, for some Chinese banks and companies, that had an effect. I mean, again, it lasted only for a few months, and then they found new banks to facilitate their trade, but that clearly had an effect. But as we know now, for almost 2 years, OFAC has not been doing this, and we are, for better or worse, not doing it either. So that's why I'm not super optimistic that we can, at least for now, as Europe, to influence too much the Chinese policymaking vis-a-vis Russian exports to Russia. And on political front, I think the current situation suits China very well. I mean, Europe is preoccupied with the war in Europe. We have a clear sort of divide between US and Europe, not just on Ukraine, but on many other issues as well. This is very, very good for China. And it's just in terms of commercial interests, they're selling a lot of stuff to Russian customers. They're buying crude oil at discount. So, yeah, what's not to like, unfortunately. Thanks.
I guess my problem, though, is that it seems like Europe is sending one leader at a time over to China rather than to have a united front to discuss trade issues with China and the relationship with Russia. So it seems like we're not actually collectively using the economic strength of Europe compared to Russia, which is still significantly larger. So can I try to answer some of Yuri's questions maybe? I'm wondering if the canary in the mine could be when we see that deposit growth stops in Russia, when people are actually getting worried about putting their money into the banking system. When we hear discussions about, the stability of the financial system. I mean, I think, given what we heard Matt also discussing how things have been financed, how the war has been financed, I think, the vulnerabilities in the banking system is something that we need to actually focus on, and where I think more sanctions could have been imposed before. And talking about, Ike also said this with Chinese bank, but with Russia, that if we don't sanction all of the banks, but we sanction a few at the time, of course they're going to move around transactions. So, the effect of the sanctions that we put, a few banks at a time become pretty quickly not so meaningful. But I think, there's more to do with the banking system, and I would actually keep track of, are people willing going forward to put their savings and their salaries into the banks, or they try to find other ways of protecting their own finances, so to speak. So this is something I would be looking at. And with monetary policy, which is one reason that we have been arguing that we don't actually believe in the official inflation numbers. I don't think actually an economy like Russia can keep running an interest rate. If inflation is at this level, they would basically have real interest rates that are double digit, while in the past they basically had zero real interest rates. So, I actually think that the fact that monetary policy looks like it is a pretty clear sign that there's much more inflation in the Russian economy than they want to admit. And on top of that, given that the strong ruble is now actually limiting the revenues that the government budget is getting, there's not really a reason to have high policy rates to defend the ruble either. So, in my mind, this is clearly, the Keynesian fiscal stimulus from the war hitting the capacity constraint with basically zero unemployment and no free capacity. And I think they have much higher inflation rates. That's why interest rates are so high. This is also why it's difficult for regular companies not doing war stuff subsidized. They are having a hard time actually financing their operations. So I think, monetary policy is definitely not running the show. It's fiscal policy running the show in Russia. And I think this is contributing to some of the vulnerabilities that are building up in the financial system now. So we know, for example, that one of the things that precede currency crisis in emerging markets is a high policy rate that attracts deposits into the banking system. But once you try to lower then these policy rates and people want to potentially think twice about keeping their funds in the banking system, this is going to make it very hard to then finance both the war machine and for the banks to buy the government bonds. I mean, I think all of these things are signs of these imbalances that Moritz started out talking about, which is again why we call it the end game. And then when war is over, I guess we can all speculate with this. I think from, one of the things that I don't agree with is that it would be hard to reverse the fact that they're spending so much money now on the military industrial complex. I think people in Russia would be quite happy if they spent more on hospitals and schools and roads, to use the fiscal resources there. But I think the Russian context today is complicated by the fact that it's people with guns that are now getting a lot of the money. So taking away money from people with a lot of guns is not really an economic issue. That becomes a security or political issue, which is why I think it's complicated for Putin to think about what to do if he cannot justify spending on the military-industrial complex or the military or the security services once the war is over. But other people may have other views on these points. So please, Elina.
Maybe I'll just quickly jump in to agree with Professor Harrison and on the importance of the no destabilizing regime change in Russia for China, given the border and also given the sort of the geopolitical confrontation between sort of China and the US that's happening at the moment. So there's nothing much to add there. And I think also there is a nice compendium that Professor Harrison has on the economic warfare and statecraft that gives us some ideas there as well. On Yuri's question, what happens after? Nothing happens after, and I'll unpack that. Many people of our generation, especially in business, remember Russia's boom economy, and business can work anywhere. In Nigeria, in Cameroon, in many complicated regimes, there has to be risk-reward benefit, right? So in 2000s, Russian oil price went from $10 per barrel in early 2000s to $130, $40 per barrel towards the 2008 global financial crisis. This is not percentages increases. This is multiples of the increase, right? So imagine we're now at, say, we'll come back to 60, and then what do you expect, going forward over the next 5 to 10 years? You're definitely not expecting the same kind of trend. And I think we have in the report a very nice chart which sort of puts together, oil price together with the GDP growth. I think is in Torbjörn's part, which just sort of explains a lot of the Russia's growth. So as a foreign investor, what do you want to do then? You don't want to come to Russia. The risks have increased. The rewards are unlikely to increase. And so why would you invest in Russia? So all these conversations about trillions of dollars coming back to Russia, if there would be sanctions relief, I think are not founded on the pure sort of corporate analysis. So that's one. The second one, we know once there is any sanctions relief, most companies actually take a very long time to come back. There are examples of Iran and many other countries. There is a certain inertia. If you just explain to the tax authority and your board why you have written off fully Russian business or sold it for $1, it's very hard to explain to the same people why you're coming back, right? So that is the second point. And the last point is, and I think it's related also to what Torbjörn was saying, is that as Putin, I want to coup-proof my regime, and I assess my ability or my necessity to do so depending on the propensity for violence of each individual group. The technocrats, you pay them salary, that's it. They're not going to go and take sticks and go attack you. Prigozhin, you pay them much higher salary, otherwise he tends to go close to Kremlin. And that's what Torbjörn was saying, you have these people with guns, maybe they don't exactly thinking about democratic change, but they do have high propensity for violence. So even if there would be the end of the war, I still need to keep these various groups happy in proportion to their ability to create destabilization for my regime, right? And therefore letting in foreign companies who are unlikely to spend much money and give a wonderful alternative to sort of Russian population, and instead take away resources from all these wonderful people who are making money because of the sanctions evasion and military industrial complex, that is a very difficult proposition. And that's why I think for Putin, economics is actually pushing him to continue the war and continue militarizing rather than actually ending the war.
Thank you. I'm going to have two questions. I see Martin and intro, and then we have some questions in the chat here, but we'll start with the hands online. So Martin, please.
I think I've unmuted myself. Can you hear me?
Yes, perfect. Thanks.
Right. Thanks very much. I look very much forward to reading the full report. I mean, as you know, this chimes very much with my own views. Where I'm a bit unclear is sort of beyond the technical work. What is the message you're trying to send to policymakers here? Because it's an end game, but what does the end game really look like? So I can sort of think of a couple of variants. One is that, the economic conditions get worse, either the sort of chronic unhappiness or some sort of crisis, and Russians get so unhappy that something breaks inside Russia. That's one narrative. Another is this just weakens Putin's ability to wage war, and that will translate into better Ukrainian performance on the battlefield. That's a different message. A third one is something along the lines of what Elena was talking about. It actually changes the political incentives for Putin, in some sense for the worse, because he becomes more desperate. These are all possible interpretations of what the consequences are of what you document, but they lead to very different types of policy advice. So I would love to hear some thoughts about that. If you are a counselor to a European leader, what do you take from this and say, well, what does this mean for what policy we should be pursuing here? And if I can just add one thing that I'd like to hear about, if you have thoughts about it, is how does the discussion on seizing assets link into this? Is it totally isolated because that's been written off already, or would transferring assets into the imminent compensation funds and so on, would that have some sort of real economic or political economy effect inside Russia? Thank you very much.
Thank you. We'll do Gintro, and then we'll have some answers or suggestions to the first question. Please.
Thank you very much, and thank you for the interesting report and this interesting presentation as well. I was wondering if any of you could say something about how this long list of economic problems that Russia is facing that are growing, that you spelled out here, will impact the Russian recruitment strategy of luring people into joining the war effort by paying them very high bonuses and very high salaries, which is quite essential for the Russian war machine to cover for their big losses on the front in Ukraine. So how and when can we expect these economic problems to start impacting that strategy? Thank you.
Thank you. Who wants to get started? Elena?
Maybe I'll quickly on the bonuses and salaries. I suggest there are a few investigations by the journalists, independent journalists, that have been focused on how they track deserters. They might invest like kind of 10 people, 6 months in terms of tracking one deserter, and also in terms of corruption and extortion that is happening already in the Russian military. And that is very well documented. So people sort of being extorted for this money, having to pay their commanders to go to the better places, people sitting in pits for months at a time, sometimes, in order to sort of to give up their money. So that to me is all signs that there isn't enough money to be able to recruit freely the way they could do just a couple of years ago. The fact that they're hunting one person who's a deserter for 6 months, you'd think, just give up, you're wasting so many resources. And when eventually they maybe don't find that person, the person who has been hunting is being sent to the front, to me is a very strong signal that it just monetary resources are not enough. And all these issues that are brewing in the economy are also spilling over into this. That's why over the last few weeks, I think you've seen many Russian officials denying the possibility of a second mobilization. I think the regime is likely to going to hold off on mobilization as much as they can. And maybe there is a chance, therefore, with some temporary truce, whether written or unwritten, for both sides to unfortunately rearm. But that is something that is definitely sort of front and center for Putin's regime, and the money is of critical importance, and as of the last sort of 6 months at least, is not there. And finally, also the Russian strategy of not looking for the bodies of the dead people, or maybe not having documents on the soldiers at all times, in order to have this deniability saying that, look, this person has disappeared. This is not there's no evidence that a family has in order to be able to collect the money. This is also one of the measures that Russian authorities are trying. I think Yanis Kluge, our friend, has also been working a lot on how much the regional budgets are spending on this. And again, this is a very sharply increasing amount. On the EU leader, what I would say is that unfortunately Russia is going to be there. It's not going to disappear. It's going to be in some shape or form a complex, very likely authoritarian structure, even though maybe Putin might disappear and find at some point pass. I think what Europe needs to learn how to live next to this very threatening and complicated neighbor for a very long time. We all would be very happy to be surprised, but if you look at the way that Russian books in schools, Russian theater, cinema has changed, especially since 2014. This regime is putting seeds for this kind of sentiment for many years to come. Even kids in kindergarten are being asked to, after 2014, to respond to the question, how did you and your family spend time in Crimea this summer? And this is kindergarten age children. So I think the regime is clearly putting seeds that will be problematic for Europe for a very long time. And on the seizing assets, of course, we should seize assets. Martin knows that more than any of us here.
I would completely agree with Elina, but I'll hand over to Moritz for some more comments on this.
I also don't disagree with Elina, so that's we're all in the same body. I mean, but I wanted to come in and quickly say a word about Martin's question, because I've thought about it for a little bit, and I think it's a little bit of everything, and I think that's I know it's not the most satisfying answer to what you have in mind, but I think what these channels that you mentioned have in common is that they shift the cost-benefit ratio of continuing the war from the side of the regime in Russia, and that is, I think, in our in that endgame metaphor, in that endgame type, if you want to stay to that. There is a number of different fields where the pieces now come together to have a situation where the trade-offs get really difficult, and I do think when you're asking about the policymakers and what we would tell them, I think it's what I mentioned towards the end of my introduction, is we think it's the right time, and we've been making this case now also both in Berlin and in Brussels, to think about what we do about the remaining 60 billion in non-sanctioned trade between Europe and Russia. Europe is no longer the main trading partner. It's still about 15% or so of Russian foreign trade, but if you raise Ukraine, or if you levy a Ukraine support tariff on these 60 billion, you can always argue with these models, but we're pretty comfortable that you get 10 to 15 billion in revenue from that, which goes a long way towards supporting Ukraine and making a difficult situation more difficult. So this is clearly a moment where additional economic pressure would come in. I also agree wholeheartedly with Torbjörn that I think the fantastic work that Matt has done on the financing of the Russian war effort, and the under the table financing through the banking system. Not only does it mean that Russian public debt is much higher than officially measured, because there are all these contingent liabilities that have piled up over the past essentially year or two, but it also means that the risk of a financial crisis is much bigger. And I also think why do we still have why is it still legal to trade with many Russian banks for certain assets? Why don't we reduce that to one? Let's see how we can also look at the financial sector that looks to be in a growingly difficult position to tighten the sanction regime. So, long answer to a short question. It's an excellent question, but I think what all these outcomes that you mentioned for the endgame have in common is they shift the cost-benefit ratio of a continuation, and it gets more expensive to continue.
Thank you. Ika, new questions or comments?
I'll comments now. I think on continuing on the trying to answer Martin's question about what kind of end game. I think it also depends on your horizon. I think we are actually pretty close to the sort of second scenario where Ukraine has been able to sort of at least somewhat shift the momentum and initiative at the battlefront. And we have been able to deny Russia a lot of the resources, both monetary and other resources that it needs to continue the war. So I think would be a very opportune time to increase these efforts to try to decrease the resources available for Russian military even further. But then, of course, in the longer run, we need to have some idea what kind of Russia there will be after ceasefire, and perhaps even after that. And then finally, on the seizing the assets of the Russian central bank, as you know, ECB is on record on being sort of opposed to that. Some of the national central bank governors have had different opinions. I think for Russia, in terms of economics or finance, at this point, seizing them would not change anything. I mean, they basically have been unavailable now for four and a half years. So in that sense, yeah, nothing would change. But of course, in terms of politics, it would be a fairly big deal still. Thanks.
I just want to add one thing before getting Matt back in the discussion. I think it's important to understand also that wars are about relative strength between two parties. So now we're discussing sanctions and Russia, etc. But I think to me the key with the seizing assets is that we could basically hand over 200 billion to Ukraine for them to buy arms, which could have an impact on the battlefield and secure financing for longer than the 90 billion loan that they have been getting from the European Union. So I think we should push hard. My policy advice would be push hard on the financial system and make sure that we send all the money we can to Ukraine, because it's really about the relative strengths between the fighting parties. It's not just about Russia. We always have to remember what we're doing to support Ukraine in the same discussion as we're discussing what we're doing to limit the resources for Russia. So that would be my sort of addition to that. Matthew, please.
Thank you. Yeah, I guess there may be some room for disagreement on what endgame constitutes. I mean, from my perspective, I'm not sure that an economic crisis by itself would start as a consequence of this, and that would lead to the end of the war. I think we've seen that in a lot of places, not just Russia, that the capacity for an authoritarian government to sustain an unpopular policy, despite the cost of civilian population, can be quite high. So I think it's from Martin's question, I think it's more of what can be done constructively to reduce the ability of the Russian economy to actually support the war effort, rather than hoping for some sort of internal collapse that way. And I think in terms of the policy advice, I think agreeing with a lot of what people have said, you want to keep, I would say the case would be for Ukraine's friends to keep pushing. There is this vulnerabilities and limits on their ability to actually get the resources they need the Russian ability to get the resources they need to continue the war. Then you want to pursue that. I think one thing that hasn't been mentioned as much here, but that where the Europeans have additional leverage, is that the extent that European exports to Russia indirectly through various countries in Central Asia has not been fully constrained. I think that there's scope there and I know Elena's written a lot about this, of saying how can be, the sort of rerouting of goods that way. The European exports to Russia have not fallen quite as much as the bilateral trade data imply. And so the extent to which that can be pushed harder, I think, is another fruitful avenue to be explored for policymakers.
Thank you. We do have some questions also in the chat about the things that you presented, Matt, on how the military-industrial complex is financed by the banking system. I'm not sure what the exact question, but I mean, I think you have already said that this means that you have all of these contingent liabilities that are basically government debt in the banking system, even if it's not called that directly. But I don't know if would you like to add something else on that point, how the links between these companies and the government works with the banks?
Sure. So first of all, I would just say this is all based on official data from the Central Bank of Russia. So there might be other things going on that are not being reported, but if we're just taking the official numbers at face value, and again, what we've seen is that the incremental growth in debt for these companies, just for companies in sectors that are related to the military. They're not all of these might be directly involved in military contracts, but in these sectors, which before the war, they represented something like a third of the total ruble-denominated bank debt, and now that share has increased dramatically because of the growth. That incremental debt increase is larger than the growth in consolidated or the cumulative deficits, budget deficits of the Russian government since the war started. So it's very substantial in that sense. As a share of Russian GDP, these numbers, none of these numbers are so enormous. I mean, in theory, obviously, there's if you're willing to pass on the cost to civilians through some combination of financial repression and inflation and things like that. Obviously, lots of things are bearable. The fact that they've tolerated the amount of death that's already occurred. I mean, but nevertheless, we're talking hundreds of billions of dollars for an economy that's about $2 trillion in size, roughly. So that is meaningful. And right, the question is basically how much can this be continued? How much of this increase has been, what are the sort of the incremental benefits to the war effort from this increase in indebtedness? And I think you need a military expert to look at that, but it doesn't seem, as me just sort of reading the newspaper, they've managed to make a lot of headway in the past year and a half, despite the massive increase in borrowing over this period. And so where is that? What has happened to it? Has the production gone up enough to lead to progress? Doesn't seem like it to me. So that suggests again, is the return on this investment, if you will, has fallen quite dramatically, which suggests either they're going to stop doing it, or it just means that it sort of is a general reflection of the limits of Russia's productive capacity to actually support further increases in effort at the war. Obviously, they're able to continue the war at the current pace, but can they increase more? It seems like there are limits they have without doing some kind of mobilization, which they've, as Elena said, they've seemed very reluctant to want to do.
Thank you. I'm going to take the liberty to just address also one other question here in the chat, which is what can we expect in terms of growth over the medium term outside of the military-industrial complex in Russia? I would say that on a more cyclical basis, we know that increasing oil prices usually leads to growth in Russia. That was the chart Lena was referring to in the report. But other than that, we all know that long-term structurally growth depends on innovation. So productivity growth, it depends on adding capital or adding labor. And I would say from a Russian perspective today, I have really hard time understanding where any of these factors are going to come from. We're not going to get foreign investment in there. We're not going to get a lot of innovation in a system like this in other sectors than in the military industrial complex. So my summary is just that outside of the war machine right now, growth prospects are extremely dim, and they will remain like this because, again, like I think Elena was mentioning before, it's going to be hard to convince foreign high productivity companies to come back to Russia anytime soon. So I would be extremely pessimistic in terms of, well, depends on your view, of course, but I don't think Russians can expect to have much growth outside of the military-industrial complex anytime soon. All right, we'll move over to Melania has a hand up, please.
Hello, thank you. Yes, I have a question. So right now, the Russian government, to defend oneself against the Ukrainian drones, continues to permanently turn off the mobile internet. And we already see how this impacts not only companies, but also the government itself, as many companies stop accepting debit cards and switch to cash. Do you think these internet blockings will continue? And if yes, how will this impact the economy in the future? Thank you.
Thank you. Interesting question. Who wants to have a stab at that? I mean, I think it potentially can actually contribute to the discussions about how people are saving or storing their money. But Elina, you have something more insightful.
Well, I think it's been a very disturbing period, especially with the internet unavailability in Moscow just a few weeks ago. And it has continued, especially in the regions close to Ukraine already for a while, but people pay much less attention to it. But when it happens in Moscow for such a prolonged period of time, and also without clear explanation from the authorities, that creates disturbance. And a lot of Russian businesses based on payments, just like in Ukraine, a lot of measures that were done during COVID helped stabilize the system after the beginning of the invasion. In Russia, I think a lot of these measures, the switch to payments, electronic payments and processing also helped, I think, stabilize the system in response to sanctions. So how they can move back to the old ages, it's very difficult. I think that testing, they have the whitelists, they have this alternative messaging system Max, which nobody wants to use. So people are resisting. And in addition to that, there is a lot of discussion about higher taxes, difficulties of doing business in Russia, even more so. And more people, I think there has been pickup in searches by Russians how to move abroad, exactly at the time when many countries are actually tightening regimes for Russians to be able to leave. So I think all of this will have an impact on the domestic economic activity, together with the kinetic sanctions, so to say, from Ukraine. It will, weigh on investment, on productivity, and on the labor market front. Putin happily reported that he has an employment of 2.2 or so percent. But I think they're also beginning to see some hidden unemployment where people are maybe working fewer hours and not making as much money. And even in the military industrial complex, you have the top brass of the companies making a lot of money, but then it's not always trickling down beyond the certain professions that they need.
Thank you. Let me maybe just go back a little bit on this idea of what do we put into this term endgame, because I think we have different potential interpretations of this. My own view on this is basically that, as we have been already mentioning, that limiting the capacity of Russia to wage its war is very heavily connected to economic outcomes and the macro picture, etc. So to me, it's not obvious that people will go to the street or protest or these kind of things, but what I can at least envision in my head is a situation where the economic limitations actually leads to less military productions, fewer soldiers, that may actually in turn make Putin show up at the negotiating table and therefore being part of the end game. But I also agree with others that I don't think Putin has the economic welfare of people in Russia as is his main goal in life. So, but does anyone else want to maybe address just very quickly any other interpretation of how you think of the end game at this stage? Well, if no pressing questions or comments in this regard, we are getting close. Yes, I see Mark raises his actual hand and not some yellow little thing. Please.
I've been sitting here thinking about two kinds of endgame. There is an endgame that would signify that Russia has lost the war. And I suspect that is not necessarily the endgame that the authors have in mind, but nonetheless, I look forward to reading the paper for a start. But I think that if that kind of endgame approached, it would approach quite suddenly, and it would there would not be one canary suddenly seen, but 1,000. And it could happen. If it happens, it will surprise everybody, including Putin. But it's not something that we can count on happening very soon. There's a second kind of end game, which is the one in which Putin feels forced to demand a pause in the war. And the Russians have huge experience of negotiations that take time and go nowhere, just as the Iranians do. And but nonetheless, a point may be reached where a pause in the fighting is in the interest of both sides. And I think that that's probably a more realistic thing to hope for. And of course, once that kind of ceasefire is in place, all sorts of things can come into play that we can't possibly predict that might lead to a better world or a worse one. We just don't know. But it's something to hope for, I think, in the short term. And I think the kind of signs of fiscal depletion. You have to remember that the Russian economy is not even 1/10 as mobilized as it was in World War II. And so in the sense of, is Russia at the limits of what is possible? Absolutely not. But nonetheless, the Russian economy might be approaching the limit of what is tolerable to important interests. Whether that can give rise to ceasefire, I think, depends a lot on the people in the elite around Putin solving the first mover problem. Because undoubtedly, I think any significant step back for Putin would be bad for his reputation, his political capital, and he might find that unacceptable. But I think it is those signs of sort of fiscal depletion, of simply, not of people in the streets, but simply the withdrawal of cooperation, the unwinding of cooperation of the civilian population with the war effort, that I think might be something to hope for.
Thank you. Yuri, final comment, question.
Very brief. This war may end tomorrow or may end in 10 years. I agree with Mark that Russia has been accumulating lots and lots of problems, and at some point there's going to be an explosion. We just don't know when it's going to happen. And I was wondering if the authors of the report can speculate about their view on how long this war is going to continue, when Russia is going to hit this roadblock, when 1,000 of canaries is going to sing. Thank you.
Yuri, we are all economists here. And if it's one thing that we know is that we can be pretty certain that the risks, for example, in the banking system, they have increased significantly. But as economists, we're also extremely bad at saying then, when will you have the crisis? So, for me, it's a very hard question. If we thought about a democratic system with leaders that want to ensure the welfare of people, the war wouldn't have started. So, that we can't really use these kind of metrics. And we are bad at actually predicting the big crisis that may actually force Putin to end the war. So my answer is that I really can't answer it. I just think that the end game to me now is that he cannot finance the war the way he has over the last 4 years. That's my end game. But okay, I'll give the opportunity to our other co-authors for a final comment.
Well, perhaps I'll start, and I 100% agree with Torbjörn that we can say that all kinds of risks have increased, but it's like predicting a banking or currency crisis. You can say that it will happen sometime, or things must change, but the actual timing and the trigger are almost by definition impossible to predict. But on Torbjörn's sort of definition of endgame, I think we are in that end game that the financing of the war and buying resources and recruiting men to the front, as it happened between 22 and 24, perhaps the first half of 25, that is now impossible. So some hard choices need to be made, or then the fighting needs to end. Whether that's next month or 6 months from now, I don't know. But clearly, this current policy in that regard is not sustainable. Thanks.
Thank you. Other final words? Matt or Elina? If not, yeah, Matt,
Oh,
please.
sure. Yeah, I just agree with Ika that you don't need to necessarily make a claim about an imminent total social collapse to make, I think, a much more defensible claim, which is that the ability of the Russian state to dramatically increase its tempo of operations from where it is now, I think is quite limited. That they basically have tried to do that with the resources they have at their disposal, and they've not been able to make that much more of an increase either in terms of the number of people they have at the front or the number of drones they're producing, or they've been they essentially have sort of hit the physical and material constraints that they have as an economy. And as long as the existing regime of export controls and sanctions and so forth is in place, I don't think they're going to be able to meaningfully go beyond that. And so the question then becomes, if they can't make progress given that level of effort, at what point do they decide to do something else, which might be negotiated settlement or a ceasefire or whatever. But that I think, agreeing with, I think Ika's perspective is the right way of looking at this.
Thank you.
Maybe
Okay, yeah, sorry, Elina.
just
Yes.
very quick one to remind people there are two parties to this war. And I think Ukraine has been utterly successful in terms of productivity and sort of innovation. But maybe we need to give them some help on scale. Well, Russia has been fighting a little bit like the Second World War with scale, but it is very disturbing when they manage to catch up with some of the innovation that Ukraine does. So we shouldn't be too complacent about Russia's inability to innovate on the battlefield, but we should also help Ukrainians maybe to have scale as much as they are managing to do innovation.
I think this is a perfect ending to this. But before we close this, it's also my duty and pleasure to thank the people that made this event possible. Elizabeth, Friederike, Nadine, thanks to all of you for arranging this interesting discussion online. Of course, also thanks to the Kiel Institute for organizing this group to write the report together. I think this was quite timely and has been a very fruitful and interesting project to be part of. And of course, thanks to the co-authors and everyone who was participating in the discussion here today. So with that, over and out from Stockholm. Thank you.
Thank you very much.
Thank you.